All right, Matt, the news is out and the numbers are in. Inflation has continued to ease up to that 1.6%. We are now below the 2% target. And I think a lot of people are wondering, what does this mean, of course, for the rate cuts that we have coming up, one more at the end of the month and then one in December. But of course, it's people that are in the middle of refinancing as well. So walk me through your thoughts when you saw this news come out today.
Yeah, it was a big beat, to be honest with you. I think the market was forecasting 1.8, 1.9% year over year. So for it to come in at 1.6, it's a big beat. And we've seen the likelihood of a 50 basis points cut increase to about 70% now for October. Yeah, so if we do get a 50 basis point cut this month, which it does appear that we're going to get, that'll bring us down to 3.75. Now, if we start to see that CPI basket continue to weaken and soften, we could see another 50 basis point cut. That'll bring us down to about 3.25 on the central bank interest rate.
Right. And so if we do see those cuts, I think what people are wondering too, of course we know that this is it's directly impacting more so the variable rate mortgage holders and as your financial planning around that for your mortgage. But there's also people that are looking at just the 5-year fix and wanting to refi. And they're wondering, what does this mean for me now? And I can see that there was a bit of an uptick there, what's that, in the last week or two. It was a slight rollover here. I guess, is this since the news? And what does that mean? What are we thinking there?
Yep, we've rolled over since the news. Not as significant of a rollover as I was expecting. I think that's because the other baskets of the CPI held up quite well. But what we're seeing here is, from April 2022 to now, we've already kind of baked in these rate cuts on the fixed rate side. So yeah, we're going to see variable rate start to come down as they make the 50 basis points cuts. But what the bond market's telling me right now, as of today, it could change as the week goes on, that maybe these 50 basis points we're going to see in October were already baked in. So it's not going to really move fixed rates right now.
When we take a look at how the bond market, and our Bank of Canada announcements in regards to the overnight rate, how they interact, I've noticed here when you showed me this that the trend line is the bond market's always moving before the Bank of Canada announcements are happening. So what does that look like?
Yeah, in my opinion, the bond market's the smart money. They always start to move first. They're the kind of fixed market. They're the free market. And what we saw in 2021 is they started moving to the high side because they knew, hey, you know what? Things are getting a little bit too overinflated. We need to start raising interest rates now. Unfortunately, the government took its sweet time before it started to move up, but they typically move first. And what we've seen on the downside as well is that they move to the downside first as well. They're kind of pricing in the 3% range. And we know that if we do get a full 1% cut over the next couple months to finish off the year, we could be down to 3.25%. So it'll be interesting to see where the bond market is telling us we're headed in the future.